Financial transactions are the basic exchanges between buyer and seller that fuel the business world. These agreements are a form of communication that leave behind a physical and digital exhaust. The resulting paper trails left behind are referred to in the accounting world as source documents. Source documents are so named because they are the original records that prove a specific transaction took place. The ability of source documents to verify that a specific transaction occurred is exactly what makes them so important. Their role in supporting evidence makes them an important part of any business process that involves going through the books. They're useful in conducting efficient bank reconciliations, accounting audits, and for tax filing purposes. Source documents are the backbone of a well-run accounting system and should not be overlooked. Let's hear from one of our experts on the importance of source documents.
When it comes to source documents, it's really a verification of the work. We talked about reconciling verifies it, but if you want to go transaction by transaction, sometimes you need a source document to actually back up the transaction itself. So the best practice for maintaining source documents, you could have a document collector app that could work. You could have your client email you source documents. There are programs like QuickBooks Online that have a document or receipt area where everything can be uploaded into one area and connected to the books. So there's lots of ways to collect those source documents. However, some people still do the shoebox of receipts. I can't say I would recommend that in my practice, but it still can happen, and you can scan those receipts as well. Ways that can be used, well, you can attach source documents in QuickBooks Online to the transaction itself. For instance, if you are doing a payroll journal entry based on an outside payroll program and you pulled the payroll report from that payroll service, you could attach the actual payroll report to the journal entry supporting the debits and the credits that you've keyed in. Another way to do that is, let's say your client took a customer out to lunch to strike a deal and get a contract. Okay, well, IRS is going to want a receipt for that meal and all the expenses, and usually the client would take a picture of it or save that receipt and write a note about what the meeting was about. That source document could be attached to the actual credit card transaction if you were using QuickBooks Online. Another way to use a source document is an auto loan. Loans have an amortization schedule where the interest and principal fluctuate every month. And an amortization schedule is going to show that payment one is this much principal, this much interest, and payment two is slightly different, payment three slightly different. So the source document for that loan would be very helpful month to month for the bookkeeper to make sure the interest and principal split are correct every month. So consequences for not having the right source documents, well, one would be you don't have a backup document for the IRS, you don't have a backup document for the statements and the activity that the bank said happened. And then also, let's say that loan balance might be off because the bookkeeper is just booking everything to principal and no interest, so you don't have an accurate loan balance on the balance sheet. So source documents are very, very important, and I recommend coming up with either an app that collects source documents for you or a program that does, or again, you could do the shoebox, but that's kind of old school, but go for it if you want. Those are source documents. I recommend you keep them.